Hello everyone, welcome to today's video. In this video, we will start learning about the basics of price action. Some of you might be already familiar with this view. If you are, great. If you are not, I will explain you everything from the beginner's perspective. So what I'm looking at here is the price of S&P 500, and what you can see here in the x-axis is time, and what you can see here on the y-axis is the dollar sign, that is the price. So basically what you're looking at is what is the price movement over a period of time for this particular stock. So what I'm using here is candlesticks. These are very common tool that anyone interested in learning the price uses. So each one or each bar indicates a candle in the weekly. That means each candle is a representation of how the price behaved for that particular week. So you can see here that there are two different colors. One is green and the other one is red. So green is, let's call it, bullish candles, and the red is a bearish candle. And I will shortly explain you the reason why a green is bullish and a red candle is bearish. So there are four things that anyone looking at a price chart looks for. I will shortly show you a green candle, and I'll try to explain you how the price moved within that green candle. So let us take this particular green candle for example, and this particular point is where the price opened for that particular week, and the price moved within this range of this high and low. So this is the low, and people usually call it the wick. So the wick is this black dotted line, or not the dotted line, sorry, the black line that you can see here. uh, so this is the low, and this is the high point, and yeah, and this is where the price has closed. So this is the closing price, this is the open price, this is the low, and this is the high. Since the closing is above the open, right, so this becomes a green candle. That means the price moved upward during that particular week. That is why it is a green candle or a bullish candle. It is that simple to understand, nothing complicated. Same with the red candle. We can take this big guy as an example of a negative candle. So that is where the price opened. This is where the price closed. There is a very small wick in the bottom, that is a low. I cannot even see if there was a wick here because of the grid line, but I assume there wasn't any because there is no solid black line, right? So that is the idea of not having any wick in that direction, because that means that was the high as well as the open point, right? So the price did not move any further up on that particular week. The price was just going down, and that is a very big negative candle for that particular week. So how to understand the price movement? So when you look at the price chart, what do you see? The price is moving upward or downward, right? Like that is the first thing that anyone interested in stock market, anyone interested in learning the price looks for. He tries to see where is the price moving, and it's very clear that the price is moving on the upward trajectory. So let us assume you are somebody who made an investment in November, right? Like you were to purchase this stock for, let's say, $450. And what happened after you made that investment? The price is continuously moving higher, right? The price is almost reached $520. So if you made this investment at $450, what is your emotion at this particular state? You're really happy, right? Like you made a good investment, and the price was moving up in your direction. Are you panicking? Are you worried at this scenario? No, you are absolutely happy. Same with this guy, right? Like all these people who made the investment along that bull run, are going to be sitting with their profit, and they will all be happy. You can see here that there were 3 red candles, which is a sign of negativity, but the price actually maybe came down to like 500, right? But since you made the investment at 450, if the price makes a small correction, you are not going to be worried unless the price again starts coming down, like maybe like 480 or something like that. That is when you get a little bit confused, right? Like you saw the price go up to 520 and now the price is coming down. That is where you get worried. Otherwise, you're not even going to book your profit. So you're somebody who made the investment last year, seeing the profit grow again after this particular $500 swing. I will explain you everything about what is a swing, what is a high, and all those things, the patterns and everything. But slowly, you will try to understand how I'm explaining the price, how the psychology of other people are impacting the price movement as well, right? Like, so at this particular point, $500, what happened, right? Like after this profit booking, the next week was a green candle, again green. So that means more and more fresh set of buyers are entering the market, and those buyers actually took the price out of the range of the people who are selling here. So people who made the short selling position here, they're not able to bring the market down. So all these people who booked the profit, all these people who enjoyed the profit or enjoyed the bull run, there was a small correction. Again, the market is going up in their favor. There was a small sideways movement after the market again reached the all-time high, and now you can see that the price is again going up in the positive direction. So there is nothing right now in the market that says the market is in the negative direction. Everything is looking positive, right? Except for the last particular week. You can see here that the market opened here. I'll try to make it a bit smaller. The market opened here. At this particular point is where the market opened. The low was very close to the price where it opened. Market really tried to again go to the all-time high, and this is the high point and the closing point here, very close to where the market opened. So the previous week, you can clearly see that it was an uptrend week. The market was continuously going higher. That is why we have a very big green candle. I call them big green or strong green or strong bullish candles. These are extremely good to see when the price is going higher. Again, we see kind of like these good green candles. So these are all indicating positivity. But suddenly there is a candle with a big wick on top. That means the price is suddenly cooling off, or the momentum is suddenly cooling off. That do not mean anything is going to be negative unless the price comes down to like these levels, like 520 levels. That will take time if the price again starts to come down. But you can imagine that the probability of that happening is really low, because all the people who again bought after 500, they're actually buying for like a future time period, right? Like they're not expecting the price to be going higher immediately. So they will be ready to wait until like August and September. They will be expecting the price to go about like 560, 570, right? Like this is why we saw fresh set of buyers again in the stock market. So even after this correction, what we see is a price trying to move in the upward trajectory. So that is how I read the price. Next week we will come up with the next week's learning, and we will explain a little bit more into the detail of how I open each candle and how I analyze the price within that particular week. I hope you all enjoyed this video. I will try to improve my video and how I explain things. So please make sure to subscribe to this channel and hit the like button if you enjoyed this video. Thank you for watching.